the vibrant streets of Cairo mask a stark reality. Egypt's economy is at a crossroads. High interest rates, soaring inflation, and mounting debt burden the country. For the average Egyptian, this means a daily struggle with skyrocketing prices. The government, with IMF support, is implementing reforms to stabilize the economy. The road to recovery will be long and arduous, requiring shared sacrifices. In a bid to combat soaring inflation, the Central Bank of Egypt has resorted to a blunt but potent tool: high interest rates. By raising the cost of borrowing, the central bank aims to curb consumer spending and business investment, thereby cooling down the overheated economy and reining in inflation. While this strategy has shown some signs of success in slowing down inflation, it has come at a steep price. The high interest rates have placed an immense burden on businesses, particularly small and medium-sized enterprises that are the backbone of the Egyptian economy. The cost of borrowing has become prohibitively expensive, forcing many businesses to delay expansion plans, lay off workers, or even shut down altogether. Moreover, high interest rates have discouraged foreign investment, as investors are wary of parking their money in an economy where returns are eroded by the high cost of capital. This lack of foreign investment further constrains economic growth, perpetuating a vicious cycle. The central bank faces a delicate balancing act. While high interest rates are necessary to tame inflation, they are also stifling economic activity and job creation. Finding the right equilibrium, where inflation is controlled without choking off growth, is crucial for Egypt's economic recovery. For ordinary Egyptians, the most tangible and painful manifestation of the economic crisis is the relentless surge in prices. Inflation, a sustained increase in the general price level of goods and services, has eroded purchasing power, leaving many struggling to afford even basic necessities. The causes of Egypt's inflation are multifaceted. The devaluation of the Egyptian pound has made imported goods, including essential commodities like wheat and fuel, significantly more expensive. Supply chain disruptions, exacerbated by the COVID-19 pandemic and the war in Ukraine, have also contributed to rising prices. Furthermore, Egypt's reliance on imports for many essential goods makes it vulnerable to global price fluctuations. When the price of oil or wheat surges on international markets, the impact is acutely felt in Egypt, translating into higher prices for transportation, food, and other essentials. The government has attempted to mitigate the impact of inflation on vulnerable households through subsidies and social safety net programs. However, these measures have proven insufficient to fully cushion the blow, leaving many families struggling to make ends meet. Section 4. Trapped in debt. Egypt's economic woes are further compounded by a mounting debt burden. Years of government borrowing to finance budget deficits coupled with a depreciating currency have pushed the country's debt levels to unsustainable heights. The Egyptian government's debt is primarily composed of two types: domestic debt, owed to local lenders, and external debt, owed to foreign creditors. Both types of debt have surged in recent years, raising concerns about the country's ability to service its debt obligations. High debt levels can have a number of negative consequences for the economy. They can crowd out private investment as the government competes with businesses for scarce capital. High debt servicing costs can also strain the government's budget, leaving fewer resources available for essential public services like healthcare and education. Moreover, high debt levels can make a country more vulnerable to external shocks. A sudden increase in global interest rates or a decline in investor confidence can make it more expensive or even impossible for a heavily indebted country to borrow money on international markets, potentially triggering a financial crisis. Section 5. Government measures and international support. Faced with this daunting economic crisis, the Egyptian government has taken a number of steps to stabilize the economy and restore confidence. These measures, implemented with the support of international institutions like the IMF, aim to address the root causes of the crisis and lay the foundation for sustainable growth. One key pillar of the government's economic reform program is fiscal consolidation, which involves reducing government spending and increasing revenue to shrink the budget deficit. This has entailed difficult decisions, including cuts to subsidies and the introduction of new taxes. Another important aspect of the reform program is structural reform, which aims to address long-standing structural weaknesses in the Egyptian economy. These reforms include measures to improve the business environment, attract foreign investment, and promote private sector-led growth. The IMF has praised Egypt's commitment to reform, but has also stressed the need for continued progress, particularly in the areas of privatization and debt reduction. The IMF has also urged the Egyptian government to strengthen social safety nets to protect the most vulnerable segments of society from the impact of reforms. Section 6. The human cost of economic turmoil. Beyond the dry statistics and economic jargon, Egypt's economic crisis is a human tragedy unfolding on a massive scale. Millions of Egyptians are feeling the pinch of soaring prices, shrinking incomes, and dwindling job opportunities. For families already struggling to put food on the table, the relentless rise in prices has been devastating. Basic staples like bread, cooking oil, and transportation have become increasingly unaffordable, forcing families to make impossible choices between feeding their children and paying for other essentials like healthcare and education. The economic hardship has also taken a toll on the mental health and well-being of Egyptians. Rising stress levels, anxiety about the future, and a sense of hopelessness have become pervasive, particularly among young people facing bleak job prospects. The social fabric of Egyptian society is also under strain. Rising inequality, with the gap between the rich and poor widening, has fueled resentment and social unrest. The government's attempts to implement austerity measures have been met with protests and demonstrations, highlighting the deep-seated frustration and anger simmering beneath the surface. Section 7. Navigating the path forward. Egypt's economic future hangs in the balance. The country stands at a critical juncture. Navigating forward requires difficult decisions and shared sacrifices. The government must commit to fiscal discipline and efficient taxation. Structural reforms are essential for growth and job creation. International support remains crucial. Ultimately, Egypt's destiny lies with its people. A collective effort is needed to build a prosperous future. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.